So one thing I really like, well, one among many things I really like about speaking with you, Lyn, and following your research is that you seem so balanced in your thoughts on hard money. It seems like these days everything is so polarized. You have a lot of people who distrust the global financial system and they invest almost entirely in hard money, whether it's gold, silver, or Bitcoin. And then you also have more the, let's call it the quote unquote more mainstream investor who have zero exposure to precious metals because, or Bitcoin for that matter, because they don't feel that hard money has any place in a respectable portfolio. And it just seems like the number of people who embrace both worlds are just getting smaller by the day. And so, being an avid reader of your blog, I'm very curious to hear your thoughts on the next topic here, because I had the pleasure of reading Redellio's book, The Changing World Order, which is just a fabulous book in itself. And in the book, Delio documents that throughout time in all countries, you had three types of money. So you had hard money, claims of hard money, and fiat money in that order. You could even argue that over the past 80 years, we had three different monetary systems. And fiat money always reset and turns into hard money again. And that's because policymakers have an incentive to always run deficits, typically either by increasing spending or lowering taxes. And so the next question is, I hate to put you on the spot here, and yet I still do it. So with all of that said as the backdrop, what will the next reset to hard money look like?
Yeah, it's a really good question. And it's something I think about a lot because I obviously want to have the best grasp on that question, both for in terms of whether and which hard monies to invest in, and then two, how it can affect other investments. Like how does it affect my equities? How does it affect bank stocks? How does it affect payment stocks? PayPal, things like that. So it is an important question to be aware of. Historically, as you point out, fiat currencies eventually fail. Now, what makes this period unique is that this period since the 70s has been the most extensive attempt at fiat currencies. It's the only time that the entire world was on fiat currency. We have better technology we've ever had before, better organization. And so this is like the most credible attempt we've ever made at fiat currencies. And even in this environment, you still have, in emerging markets, a lot of their currencies fail. And then they resort to hard currency, which ends up not being gold, but ends up being like the dollar, which for them is a hard currency because they can't print it. Right. So even in this environment of 50 plus years of fiat currency, you still have that keep happening to countries over and over and over again, where they resort to a harder money standard. Either people in those countries can protect themselves with gold, silver, real estate, things like that, as well as by owning those harder foreign currencies. They can get through that as long as, like we talked about before, as long as they're not invested in a bank where they risk getting confiscated from you, for the sake of like national solvency. And so this is something that we see even to today. It's not even like a theoretical framework. It just keeps happening. And so far, the survivor bias is that the major developed countries have been able to go over 50 years without the system breaking down. Now, critics of the system point out that it's gotten less stable over time, and I would agree with that. I think the petrodollar system is less stable than it used to be. I think that Ray Dalio's concept of the long-term debt cycle is accurate, meaning that when you eventually get to zero rates and super high debt, you kind of run out of room to keep kicking the can down the road the same way that you have been. And the problem now is that this is the first time within this 50-year fiat currency period that we're going through a long-term debt cycle, meaning that historically the answer to that is financial oppression, holding interest rates below the inflation rate for a sustained period of time. And I've shown charts on this that basically over the past decade, in most countries, cash and T-bill rates have been below the inflation rate. In the past year, in the past couple of years, even long duration bonds have in many cases been below the inflation rate. And specifically for 2021, it was such a big gap in many countries. Like in the United States, it was 7%, difference between CPI and T-bills, which is the biggest gap since 1951. So it's the biggest gap in the fiat currency system. I think there are credible arguments that this fiat currency era will eventually run and become so unstable that it breaks in some way, right? So we already see around the margins, some central banks like Russia are buying gold. They have like a 20% gold allocation. I guess maybe they read that book Permanent Portfolio, so they have mostly euro-denominated assets, but they also have like a 20% gold allocation. So generally, you see a sovereign bid for gold ever since the global financial crisis has kind of stirred back interest. I think different kind of serious market participants and sovereign participants started to maybe question the idea that this fiat currency regime might not last forever. We always have a tendency to think we're at the end of history, like we've solved the prior problems. This happens in commodity markets because people think during disinflationary decades when commodities are cheap, they kind of think we've solved the commodity problem. We're never going to have high commodity prices again. And then no investment money goes into it. And eventually you get shortages and you get a higher commodity price environment. Same thing I think that we're going through in terms of, a lot of people, especially people that are very strongly believe against gold, against Bitcoin, in favor of the fiat currency system, that the idea of we've solved history, we've figured out how to do it this time. I will take the under on that view. I think that probably, I think we're already seeing signs that it's not working well. I think we're going to revert back to, some period of either standards go back on a hard money standard or they don't, but people can protect themselves by having those types of assets. So commodity producers, commodities, or self-custody types of hard monies. What the system looks like going forward, I still think it's an open question, right? Because in some ways you can look back and say, well, gold already failed. Maybe we will go back to it, right? So it failed only in the sense that it was too centralized, right? So gold itself as an element didn't fail, but basically it didn't have an ability to keep currencies tethered to itself, and people didn't have an ability to exchange for it and portably hold it. Bitcoin proponents would argue that the future is Bitcoin. I think that's credible, but I think it's still early, right? So it's a very volatile. Right now it's less than $1 trillion market cap. Whereas gold's over a 10 trillion estimated market cap. Global assets are something like 700 trillion. Credit Suisse estimates that global net worth is like 500 trillion. That includes assets minus liabilities, so the asset side is much larger. And so I still think there's a lot of open questions about how the system ends. And I think it's something that you can't have if you have like a firm view on the risk is that you're wrong, but it's also not something you can ignore entirely. I think it's a question that we all have to study and look at history, but then also look at current geopolitics, current technologies, where the trends are going. And so I think it's an important question to watch. And so I do think that we're going to that hard monies are going to have their place in the future again, and that they already do in many countries.
Ray Dalio has this great quote where he's talking about that the reason why he made so much money is because of what he knows, but what he knows he doesn't know. And I can't help but think of that quote whenever we have this discussion, because I don't know what's going to happen. I do know that the system we're going to have now isn't going to be here forever, because that's just the nature of history for everything. It's so tricky figuring out what's going to happen. Now, today we talked about gold. Are we going to be on the gold standard again? I don't know. It's just one of many possibilities. And whenever you do read up on it, I'm sure Lyn, but there's just so many different types of gold standards that we've been on in different countries. So, okay, so what do we refer to whenever we talk about gold standard? So that's one major topic in itself. Bitcoin, I understand the intellectual argument why it has all the capabilities that, say, fiat money don't have, but it just becomes so much more complicated whenever you think about the incentives. Like, who has incentives to do this? You can make the argument, you don't have this issue, the inflationary issue you have right now, it's deflationary by nature, it's a better money, ergo let's use it as a world currency. That's just not how the world works. At least that's not how the world works now. That's not how you define a reserve currency. That is not how countries sell transactions. So I think it's very, very, very early to consider Bitcoin in that realm. Something I sometimes revert back to is SDR. The reason why I'm saying that is not necessarily because I think that's a great system. It just seems to be a system that countries might be able to agree upon.
Yeah. So in my article where I talked about kind of the current, we can call it the petrodollar system, the system that's been in place since the 70s, and why it's failing and where it's going, I outlined those possibilities. So I discussed like an SDR like basket, either a global SDR or like regional SDRs, which for people that are listening and don't know what that means, that's essentially a basket of major currencies that serves as like a unit of account for like global reserves or international trade. And that was actually proposed as the Bancor in it rather than the Bretton Woods system, but it was not voted on. It was basically it wasn't the one that won that system. And it's one of the ones that would be more balanced in terms of managing trade balances and things like that. And the challenge there is that if fiat currencies start to fail, a basket made of fiat currencies would also fail. It would just fail at a smoother rate, because if one of them, if say there's is 5 currencies, if one fails quicker, it's balanced by the other 4. But because they're all tied together in some ways, we all have kind of the same roughly zero rate policy in developed markets and high inflation. I think that you generally would have them each pulling each other down, taking turns. I think if the system were to like fail next year, gold has kind of the claim, right? That's kind of the default assumption. There's even, I think it was the Dutch central bank published a piece a couple years ago saying that if for some reason the system failed dramatically, gold would likely be the fallback. And so I think that's kind of the default. Like we pointed out, that even in a non-gold standard, central banks still use gold as a reserve asset. They're still actively, in many cases, buying gold as a reserve asset. The United States is not. But I think so. Let's say if we're having this conversation in 10 years, so when it comes to say Bitcoin, I'm like, well, like wake me up when it's 5 trillion market cap, and we'll have that discussion, right? And one thing we're watching is that the market is kind of assessing how hard is the money, right? So it's only 13 years old, right? So it's kind of like they're testing all these different aspects of it. What happens if you're making a lot of altcoins? Can any of them kind of take market share? We're finding out, okay, what if we try to hard fork it? Does that work? What if we, it's just kind of like all these what if questions. And so over time, we're testing it. We're doing different things. The mining hash rate's moving out. We're seeing how different countries either ban it or approve it. And as it gets more widely held and less volatile, it could grow in market cap. And then it becomes a more serious discussion. Is this something that major central banks are going to hold? And then if they do, and there's a currency failure, can that end up being kind of a global substrate for money that kind of competes with gold? And so I think that's a reasonable long-term outlook, but it's like you have to hit certain benchmarks before that becomes, the one that would fall back now, right? So right now it'd still be gold. And so I think that's the way to think of it, that basically, even with the SDR, in some ways, whether or not you expect the SDR to win versus, say, gold or Bitcoin comes down to whether or not you expect global collaboration, right? So if you want to short the idea that countries are going to come together and decide on something, you would generally err towards gold and Bitcoin. Whereas if you do expect that they're going to say, okay, we need to do a Bretton Woods 2.0, we need to fix the system, and you're going to have US, China, Europe, major countries and currency regions come together and agree on something, then you could have an SDR. You could have an SDR with a gold component. You could have, there's all sorts of things that could come together. And of course, in the modern form, that would take the form of like a digital SDR, right? So they would incorporate probably central bank, digital currency technology into the SDR to kind of reinvigorate it from the version that was, initially that existed since the late 60s.
Yeah, I think it would be a default for a lot of people listening to this that would say, well, the world's governments can't agree on anything. And I'm not the one to say that they necessarily can. But what history has shown is that whenever you do see a reset, what typically has happened at that time, countries are so exhausted. They're so exhausted upon Bretton Woods in 44 would be one example, that they are willing to come up with an agreement. Not a great agreement, but something that just works because they just can't do it anymore, what they've done so far. So, but Lyn, I know we can go on for hours talking about monetary policies. You've been very, very generous with your time, and I wanted to give you the opportunity to hand off to your wonderful blog and any other resources. And I can just say that I subscribe to Lyn's blog. It's just such a wonderful resource. So, Lyn, please tell the audience more about it.
Yeah, so lynalden.com, I do public articles, long-form pieces that dive into a subject usually. I also have a free newsletter that comes out every 6 weeks that usually talks about more topical subjects. I have a low-cost research service if people are interested. I'm also active on Twitter at Lyn Alden Contact. Another book I could recommend, it's not my book, it's called Money Dethroned, and it kind of covers this traveler from North Africa. Kind of like Marco Polo, he traveled around multiple continents. And the person kind of relies on some of his writings to just analyze commodity monies from around the world and why certain monies beat other monies and what happened when they interacted. And so I think we're used to having to change our investments from time to time, right? Because we know that they're volatile. We're not used to having to change our money from time to time or even think about what is money. And I think that we're in this environment where we have to think, and this is probably going to be a question for the next 10 years, is what is money? And so I do think that it's basically a subject matter that people would be good to read up on. So the one you recommended, or that one, or other ones in general. I think it's going to be a topic that we want to know about. We want to know the history of money. We want to know what are the current proposals for what money is going to look like going forward. Do you want to focus on a money you think is going to win? Do you want to diversify your monies? I think that's going to be, it's already an important question. I think it's going to be increasingly an important question over the next decade. And it's something I have future articles I plan to write about. I've already written about it to some extent. And it's something that, just like I analyze different investments, I'll be analyzing different monies and just basically, just like anything else, trying to fit into a portfolio and determining where do I want to hold my assets for different types of environments.